My next guest is Managing Director of Fixed Income Strategy for BlackRock's $80 billion iShares exchange-traded fund, and his latest product invests in municipal bonds, muni bonds. Matthew Tucker here with us in the studio. Matt, great to have you stop by.
Thank you for having me.
Before we get to munis, though, I just want to get your sense, just because you're chief of fixed income at BlackRock there. This Portugal news, what do you make of it?
Well, I think the market has largely expected it for a while. I think there's a lot of concerns around the countries in the euro. It's not surprising this story hasn't fully played out. And probably until these companies repair their balance sheets and really show some long-term fiscal stability, you're going to continue to see some headline events like this.
Is this another case of the rating agencies, though, lagging? Are they late in the game or what?
That's always hard to tell. You know, it's easy to play Monday morning quarterback on these things.
Yeah,
but I definitely think that there is concern in the market, and the rating change reflects that.
Okay. Getting to muni bonds, though, these new products that BlackRock is selling essentially. I've been actually hearing from a lot of friends. I'm hearing about investing in muni bonds. It seems like the banks are really selling these bonds hard now to investors. Why would you go into an ETF versus just investing directly in these muni bonds?
Sure. Well, the real challenge with the muni market is it's very opaque, right? It's very hard for you as an investor to understand what a good price is. It's hard to access securities. There's not a great amount of liquidity for the individual out in the market. So what the muni iShares, the muni ETF really does, it provides a diversified vehicle that you can trade on an exchange. So you get diversified access, which protects you from credit events, and you can actually trade it on the stock exchange. You can actually see a two-sided market and see what kind of cost you're paying. Okay,
so there's a bit more transparency there. But given that, then, all these problems with the sovereigns, how do you know that that's not going to leak over to the munis? I mean, they're having, huge problems with budget shortfalls and not being able to raise taxes and all of that.
There's no question that there are a lot of challenges facing municipalities right now. As you look across the landscape, municipalities, across the country. I happen to live in California, so this is obviously in the news a lot for us.
Okay.
But you really have to step back and think, okay, as an investor, if you want to invest in muni bonds, what do you need to be comfortable? You really want a professional manager who can look at the credits and know what's going on. You want diversification, so you can make sure you're not exposed to any one issuer. And you want transparency. You want to really be able to see the bonds you have exposure to, so that you know when the next headline comes out, you know if you're exposed. And that's what these muni iShares do.
But there's some sense, and I know we had an interview earlier with Michael Ehrenstein, who was saying essentially that these bonds, or these bankers, are actually basing these bonds, pricing them on these unrealistic expectations of tax revenue, of population growth. I mean, are there danger spots that you can find then and know that these are, that these bonds are mispriced?
Well, I think it's difficult to make very generalized comments like that, about the whole market being down or whatnot. I think the reality is that there have been real challenges with the housing market, challenges with consumption, challenges with income, and that's put a real strain on the revenues that municipalities collect. There's no question. But if you start to take a longer-term view and think about the tools these municipalities have, whether they're states or counties, they have the ability to change laws, to enact taxes,
sell assets,
and to get through it. Yeah. So I think our view is that we expect them to be able to get through this. There'll be some challenges, but it's not as if they're no longer good borrowers.
Okay. Do your homework. That's essentially what it is. Okay, Matt, thank you so much for joining us.